All right. Hello, everyone. Welcome back to our another series of our guest interview. Right. So today we have a very, very interesting guest with us today. Right. So just before I carry on, I'll just check my audio and video. Right. So just let me check my phone to see everything's working well. Yep, I think everything's fine. Right. So today we have a very special guest. Right. He is the founder of Soningar System, which is one of the most popular thread in Forex Factory, with 1,000 followers and 78,000 post replies, right, and 14 million views. And his on-the-dot accuracy and trading philosophy has inspired many traders, right? And he's now actually one of the top 20 contributors in the TradingView website, right? So basically the next-gen social trading platform. So to me, this guest speaker, is very special because when I first started trading, right, I actually followed him, right, on his Telegram group and Facebook group as well, right? So, of course, I wasn't on Forex Factory then, right? Maybe I'm slightly younger, but other than that, I really learned a lot from this guest speaker, right? So, of course, now let me introduce and welcome Mr. Kao Chun In. Hello, bro.
Hi.
Right.
Hello, everyone. Hi. Hello, everyone. Good to see you, bro.
Good to see you as well, bro. Right. So, of course, I think the first question. Oh, sorry. I think there's some echo now.
Yeah, sorry. Yeah, it's from me. Sorry.
Oh, no worries. All right.
That's
so,
right. Okay.
No problem. So, the first question I will ask is, how are you during this COVID-19 period?
Yeah. Okay. As you can see, COVID, right? I mean, it affects everyone, right? It's an unfortunate event for sure, and it is still ongoing. It's affect everyone, and it's also affect me for sure. Yeah, it does affect me. Yep. Yeah.
Okay. So, of course, as traders, even for me, right, as a trader, people will say, hey, actually, COVID-19, the lockdown is what we are doing every day. Basically, we are at home. We are reading charts. Right. I believe for people who are doing full-time trading and educator, definitely there's definitely going to be some impact as well. So, for yourself, have you moved everything from seminars to all online to webinars, or are there still plans for seminars in the future, and etc.?
Yeah, actually, of course, it does affect us for sure. And the good thing is that, like for example, like we have been using like GoToWebinar. Even before Zoom become popular, there was an app called GoToWebinar, right? So we have been using and actually, in terms of that kind of lifestyle, or rather support to our group members, it doesn't really affect at all. But of course, currently we are not really like having a physical talk at the moment and stuff like that. So this is we don't have to adjust too much, but of course there is some effect there as well. Yeah, for sure. Yeah.
I see. All right. So, and of course, the next question will be: I know that you are a full-time trader, right? So, can you just give us a brief, introduction on what's your daily routine like? Like, do you wake up and go for a run first, or do you open your charts early in the morning and stuff like this?
Yeah. Okay. Put it this way. Actually, I start my trading plan actually from weekend, right? So it's like how do we do is that I will start working on my it's like more like a top-down approach, right? So I will start like from Saturday, Sunday, I will start my weekly plan, right? So I will do some fundamental analysis, all this kind of stuff. Then I will do my, of course, weekly analysis because I use the like weekly chart, right? Or even sometimes I look at the monthly chart, right? Then from there I go down to the lower time frame. I don't really go down to a lot of lower time frame though, but like daily, this is my go-to time frame. So I start on weekend. So from there I try to find to like think of like, should I like it's like telling me to go long or go short. So it's from there I go lower. And there are 4 things that I look at. For number 1 is of course technical analysis for sure. All right, technical analysis for sure. Second one is of course I will look at some fundamental data. All right, fundamental data like Fed fund rate, like for example, like this what we call it, they are holding the treasury holding, all this kind of stuff. And I also look at what kind of news that they will be coming out in the coming week, right? For example, like this week we have quite a lot of Europeans and non-US dollar related news coming up. We have like Canadian dollars and stuff. So I will look all these things. And of course, last but not least, I also look at the geopolitical issue. Geopolitical issue in a way that like, like I have to make sure, what is going on right now, is there like war going on, trade war going on? But for now, of course, the COVID situation, right? So these are the 4 items. I look at the technical, I look a bit of fundamental, I look at the geopolitical, and I also look at the news that coming up, right? So these 4, and then I make a trade plan for the weekly trade plan. Then I go to the daily. Then every day I wake up early in the morning. Then I look at whether they are in line or not. Yeah. So basically, I do all my planning lah. Because as you can see, like for example, like you can see some. This is the book that we used to have it, right? I used to have it. So yeah, this is my weekly plan actually. Yep.
I see. Yeah. I think that is very interesting, right? Because so far we've. Yeah.
Okay.
So far with some of the traders, I mean, or at least all the traders that I know of, they always say that, hey, planning takes place over the weekend, right? Weekend is really where they really start to plan, and weekday they right? Plans. And of course, you mentioned 4 things, right? Fundamental analysis, technical analysis, geopolitical risk, right? Of course, major news or major interest rates news, and etc. So I believe these are all really, really important. But at least, actually, I got a lot of questions from there, but before I move on to all those questions that I believe that all the audience will be interested in, that I understand that Sonic Art System actually started from Forex Factory. So just want to you started from there, is it because I know you have a co-founder, James, right, previously?
Yes. Of course, he stayed with me. Of course, he stayed a co-founder.
And of course, when do you actually move out from Forex Factory? And, any reasons why?
Okay. Forex Factory, I started in 2008. I mean, I have two main reasons when I started on that. One thing is, of course, to have ownership of myself, right? Because because that time what I was doing was that I'm trying to I try this analysis, try this method, right? I want to make sure like a trading journal rather, right? I posted up something, later I want to go back to see again whether whatever my analysis is correct or not and stuff like that. It's more like a self-commitment, right? Then in 2008, and of course I have tried quite a lot of method. I have used like MACD, all those stuff, right? Then what happened was that in 2011, somewhere around 2011, it was 9 years ago, yeah. So it was like because I start to try and error, try to check out is this system is good or not, is that what is the pros and cons. Then I stumbled upon something called VSA. I'm sure you know by now, right? Or volume spread analysis. So it's like put it this way, it's like it's something that not usual, right? Because we have been using all the technical stuff like that, right? All the technical other indicator based, right? So it's like it's really like refreshing to me in 2011. And what happened was that we noticed that our analysis become more and more accurate. So it's like we say it's going to go up. After a while we check, it's go up. Are we going to go down? It's go down. So it's like people start to take notice, right? So people start to get involved and stuff. This is where James start involved as well. And I also have a lot of great contributor from not only from Singapore, of course. I also have people like from US, like a trader at home. Yeah, I stay thanking enough for all his help for sure. This is how I grow from there. So we eventually become, I would not, of course it's not first, but we become, I think, within one top 5 most so-called view trade in the Forex Factory. And eventually, Facebook came along, right? So slowly, people start to adopt the Facebook and stuff like that. So I slowly grew out of this Forex Factory as well. I'm still around there, but I post a little bit lesser now. Yeah,
I see. Okay, that's a very, very interesting journey actually from you, and I believe VSR, right? So volume spread as analysis. I think that is something that a lot of people, try to find, right? They have been trying indicators. Not saying that indicators are wrong, right? Just that people are trying different stuff, but some people just happen to find a sweet spot, things that really suit their trading and etc. Right. So of course, I think that is actually very, very important. And of course, I believe next question will be that for those viewers out there, I mean, if you just joined, believe it or not, right? Fullerton is actually one of my trading mentor that I follow when I started my trading journey, right? So actually, I started trading 3 years back only, right? So I actually started to follow, on Facebook, Trading Arena. Then I came across Sonic R system as well. I've been following Fullerton for a while now, right? And I think there's actually a lot of things to learn from all these trading gurus and educators, right? So of course, for Fullerton yourself, is there any one tip that you want to tell people, right? So maybe in a phrase or in a sentence on how to actually win this trading game, right? So I mean, it can be a game, it can be a profession, but how do we actually win this trading game itself?
I think this is people call it like it's the most difficult way to get the easy money, right?
Perfect.
So yeah, of course it is. There is a certain issue that everybody have to go through. But of course, by listening to people, right? This is why we do learning, right? So that we can learn from people's mistake, so that we don't have to repeat the same mistake, right? So there are 3 points. There are 3 major points that I want to sort of like suggest to the listener out there. All right. The first one is, of course, because I am also a technical trader, but I have been here for almost how many years now? 12 years, right? So what I can conclude here is that technical analysis is not a complete answer. Okay. So it's like like, don't get me wrong. Of course, I'm still use technical analysis, but what I'm trying to say is that it doesn't detect everything. So it is a part of it, but it is not everything. This is a point that I'm trying to do here. So technical analysis is not the like a complete answer. It's just a tool that helps you make your prediction better only. So this is number 1 point. Number 2 point, in my suggestion, is a bit more of a personality, because you want to be a good trader, you need to have a personality of the good trader, right? Put it this way, correct? So what kind of personality I'm talking about here is that you need to have a bit of good routine. For example, like you cannot be one day I want to, all of a sudden I want to try out. Like, so this is what happened to a lot of traders nowadays. When they heard market is doing very well, or certain product is doing very well, then they will wake up again and they will try to jump into it. By right, in trading, you have technically have to be there before it's happened. You know what I mean? So I think this is where the person who have a good routine really shine. All right. So second one that I want to point here is that you need to have a good routine. For example, you like it or not, if you're a daily time frame trader, you have to look and evaluate your chart every day in the morning. Of course, I mean in the morning for sure, right? You can be in the evening, or it's depending on how you categorize, but at least once a day. You cannot, just go away for a while, then come back again. Cannot. So this is the second point. Okay, the first one is technical. It's a full answer. It's not a complete answer. Second one is, of course, you need to have a good routine. If you don't have it, it's time to develop it. All right. And third one is, of course, the same thing, something to do with technical analysis. Since technical analysis is not the complete thing, there's 2 other major factors that you need to so-called incorporate in your trading style. The first one is, of course, risk management. All right. The reason that risk management is very important is that we are doing a little bit of guesswork per se, right? Sometimes you say it's going to go up, how sure you can be. Sometimes instead of going up, you go down. You know what I mean? So it's like there's a risk management that must involve with everything that you trade, every trading that you do. And last but not least, what you need to do is you need to adjust your trade expectation. I think this is where a lot of new traders fail. For example, like people say, you jump off from the plane and you find a parachute. No, not really that. Not you in trading, you cannot do that. All right, you have to wear your parachute first, then you jump off from the trade. So what I'm trying to say is that when you're about to take a trade, at least you should know that what if the trade go wrong. What if the trade doesn't turn out in your favor? And trust me, quite a lot of time it will turn out that way. You know how sure you can be. How sure you can. So have you ever come across like market is really going up, But when you buy the next after the right in the next moment you buy, maybe by the next day or so, market just turn back down already. You know what I mean? So trade expectation is important. So let me just summarize your question, bro. Or my answer, just 3 points. Technical analysis is not the complete answer. All right. Second one is that you need to have a good habit or good routine. Just follow it because you need to have it. And third one is you need to incorporate the two components that I just mentioned: good risk management, and you need to have a proper trade expectation. I hope I answered your question, bro.
That's a very, very complete answer from you, bro. Actually, yeah. So I believe this definitely answered my questions, right? And of course, I believe the last point, on the expectations, and sometimes, even for myself, right, I have a plan, I follow the plan.
I stay make mistake until now as well. I mean,
yes, right. So you enter and you realize that, hey, seems like the bad luck is on me. Right? Every time I press, I lose, no matter what happens. But I think all traders must know that, even if you lose, right, it is part of your plan. And it's always part of your plan, and you must stick to your plan, right? You don't try to say that, hey, maybe my luck is bad. I try to go against my plan because, what's so and what not. Always go according to your plan. Even if you lose, it's still part of the plan. And I think that's very important. Right? And of course, I think a lot of people or our audience here actually know that you trade Forex as well. But is there anything other than Forex that you trade?
It's for of course I do trade. Other things such as because I cannot look at every instrument, right? So I have a bit of routine again. So I look at the major pairs, major products such as Forex, right? So I look at individual item like gold, the Aussie, New Zealand, right? Then those Forex, and I trade commodity. And in commodity, right, I suggest you may want to take a look closely on the oil market, the oil market, because I think a lot of people tend to overlook that market because crude oil market is one of the liquid and one of the biggest market in the world as well. Actually, if I'm not wrong, don't quote me here, but if I'm not wrong, okay, it is even bigger than the gold market here. Okay, so the oil market is something that can act as a leading indicator. All right. Okay. Then of course apart from the oil, I look at the stock index for sure. So from there, I will look closely on stock. These are my major items. Then after that, I will go down a little bit, maybe into the individual stocks. So I rarely trade much of the stocks in terms of trading, but I do some investing in the stocks. For example, I buy and hold and stuff because to me, stocks. Not really a big fan of in and out, stuff like that. If I want to do a bit of in and out, like swing trading, I will look for gold, silver, or even Forex and indexes.
I see. Okay. Interesting amount of instruments that you trade actually. And of course, since we're on the topic on gold and commodities, and I've been following for a while, and I believe that, you have been telling people, hey, you should look at wheat, corn, all the food products, the staple products that people are looking at, and you believe that, you believe that it should be going up, right, during this period.
Yeah.
Right.
It is going up, and I think it still have a bit of leg to go up to. Maybe later I will explain to you why I say so.
Yeah, sure. Okay. And of course, I believe since we are on the topic of gold, is that, gold have broke through 1,008 now, right? I believe it's 1800 or 1820 something. Around those lines.
182, 1825 or something, right? Yeah.
So the next question will be, do you believe that there's more room to run for gold? Right? Some people are saying that, hey, 2,500, right? 2,000. What is your opinion on this for gold?
Sure.
Yeah.
Sure. Instead of I just give you a yes or no answer, I want to explain to you why I think that it will be going up higher. All right. Okay. All right. I think we will talk a little bit about what is happening into the current market right now.
Yeah,
okay. Of course, nowadays it doesn't sound more and more like a technical analysis. It sounds more like a bit on the like a position and swing trader type now. Okay. Because let me explain what is happening right now. Okay. So you can see. All right. I'm sure you know as well. What is happening here right now is that for the past 12 years since 2008. Okay, I'm sure you know what was the main reason why the market have been behaving, why in the way that they have behaved in the past 12 years. Okay, you can see that it is just based on one thing, right? It is basically it's a monetary expansion, right? Monetary expansion. So what happened is that when there's a monetary expansion, everybody thinks that, I mean, not say everybody, like, I mean, most of the mainstream economists thinks that, for example, like some, I don't name here. I mean, you go to YouTube, you can see they have been shouting, "Oh, go to 5,000, 10,000." You got. I'm sure you have had before, right? Okay, but I mean, it's already 12 years. But what happened to gold? Right now, is we are stay stuck around $1,800, right? It's only for the past few, I would say, few years or less than a year or so that it start to rose from 1,004. Now we are 1,008. So what really happened? If we had a very big QE, as people has been talking about, why there was no like hyperinflation or even inflation or even hyperinflation is not happening, right? Okay, one of the things that people miss out, or this analysis miss out to take in consideration is that the US dollars. Okay, so a bit on the US dollar here. Okay, what happened on US dollar is that if let's say you increase your monetary expansion like what they did on QE, right? If they do on like a Zimbabwe, right? And if they do on like Venezuelan currency, right? Of course, they will have a hyperinflation, right? And it did happen, right? But why the US dollar didn't happen? There's two major parts that making the US dollar so special in this case.
Yeah.
Okay. So what's the two major parts? That the first is that, of course, everybody know US is a reserve currency. Okay, so like it or not, everybody need US dollars. Agree? Right? You like you say, let's say we buy a laptop, right? Let's say we buy a laptop. We the laptop made in China, even though it's made in China, right? We have to pay with Singapore dollars, and Chinese the manufacturer will be paid in yuan, right? But in between, very likely that we will not be exchanging the Singapore dollars and yuan here. We will be in the middle, will be the US dollar there, and most likely the company is a US based company, right? So whenever we do the transition, even though we deal it in like in our local currency, but somehow there's a US dollar transition involved. Unless, I mean, we don't go to the vegetable shop. Okay, that's another case, right? So the US dollar is stay in demand. So this is number one that causing US dollar not to hyperinflate. All right.
Yeah.
All right. Even though they are printing 2 trillion amount of money over the past 12 years. Okay, 2 trillion. Yeah. Then second one is that we have something called euro dollar. I'm sure you have heard before. Okay, what is the euro dollar? Is that even though US by right US currency is US, I mean the US citizen or US people, they're supposed to be spending around, right? But the problem is that there are a lot of US dollar floating around or transaction outside of the US in terms of corporate bond, right? Doesn't have to be cash, yeah. I mean the actual percentage of the US cash is very small compared to the whole amount of US dollar that's circulating around, because they doesn't have to be US dollar in the cash. They may be in a corporate bond or stuff like that. Okay, so because of there is a demand and there is a transaction going on that US dollar based bond, right? That's the reason why there's a demand. So that this is a two major item that causing or preventing rather from US dollar to go hyperinflation for the past 12 years. Even though they bluntly put they printed $2 trillion out of nowhere. You know what I mean? So back to your question, bro. So what happened because of that? So what happened because of that? Instead of inflationary environment for the past 12 years, what happened is that instead of inflationary, instead they become deflationary for the past 12 years. So that was the reason why we didn't see any like big food price. I mean, very major food price rising. We don't see major oil price rising. You see what happened to the oil price? It was in 2011, if I'm not wrong, the oil price was $100, 150 somewhere around, right? Definitely not $100. So where we are right now, we are barely $40. So where is the hyperinflation, right? Okay, so I have already tell you why is the reason. So two main reasons now. So yep. So that's the reason why we are in the deflationary environment. So that was the reason why gold is for the past 10 years, it wasn't doing really well. It dropped from, I think, from 1008, and now that we are back to 1008 again, right? So moving forward, there's something just happened in last March. I mean, of course, it's like I said, it's an unfortunate event, right? Okay, if I have to compare the scale, what will happen is that for the past 12 years, the QE is only worth $2 trillion. All right, $2 trillion. So they are sort of like federal debt go up to until starting of this year, we are somewhere $4 trillion only. Okay, so this COVID happened, right? So they just flood the gate again. All right. So what happened? They jump up to nearly $7 trillion. So like what I'm trying to do here, I'm trying to make you feel the intensity. Previously, 12 years, $2 trillion. From March to until now, $3 additional trillion. So it's like they like all of a sudden they surpass all the spending, everything that they have done for the past 12 years in 3 months. Okay, so it's like to answer your question now. All right, there's no such thing as free lunch. Right, they didn't suffer any hyperinflation because of the two factors that I explained to you. But they are in this time at the moment. I think they are overdoing it already. Okay, so I expect gold and silver, especially, and of course, along with the other commodities, more or less, I think they will go a lot higher eventually. Of course, there will be along the way, there will be market, some pullback and stuff like that. But the trend is quite clearly that these are going to go up higher.
I see. Wow, that's a very, very thorough explanation. So actually, you explained one of the questions that I wanted to ask now, right? Which is, do you believe that US dollar will be king at the end of the day, right? So I believe you explained it very clearly that dollar is the there's demand for dollar, right? Everything is in dollar, pegged to dollar, and I believe your explanation is definitely very clear that no matter how much you print, dollar will also be strong, right? Because the whole world is using dollar. You buy a laptop, you have to use US dollar, and
you're right.
Yeah. So of course, I think that's a very, very complete explanation from you, definitely. So of course, now knowing that dollar will be king, the next question I want to ask will be on the US stock futures or the the S&P, Dow Jones, Nasdaq, right? So of course, I believe there's a disconnection that the whole world is talking about, right?
Big disconnection.
Correct. And of course, I believe the next question will be, moving forward, do you think there's still, or for US stock futures at least, do you feel that this connection will eventually be connected back, right? Will the future eventually fall lower, in your own opinion, right? So of course, to those audience, this is not a trading advice, right? These are all opinions of our guests and
for sure. Yeah. All DY, ODD, right?
Correct.
I can be wrong as well, and I'm proven wrong many times, right? Yeah, but of course, there's times that I'm right as well, for sure.
Yeah. So of course, the question will be, hey, do you believe that US stock futures can continue to run higher, despite the COVID situation, still rising in US at least?
Actually, I have been researching about this. I have been researching about this for quite a while now. I would say, okay, there's a certain reason. Okay, sometimes even though the economy is bad, doesn't necessarily mean that stock market is going to go down. Okay, don't get me wrong. It's most of the time they are supposed to be proportionate, right? I mean, economy bad, go downs and stuff like that. But for this time around, there is I would say the catalyst rather, right? It is not really not really due to the economic per se. Okay, if you look at the 2018-2019 period, look at the stock market. Actually, the stock market wasn't doing really well. Actually, if you go back to look at your Dow Jones chart, 2018 to 2019, somewhere around that period. Of course, in 2020, just right before the COVID, they run up. Yeah, I agree with that. But for the past 2 years during that period, it wasn't doing well. Then I will say COVID just like become a pin to pop the bubble, right? And they really go all the way down. So what is happening next is that I want to give I want to give an equivalent with the Weimar Republic. All right. I mean, of course, I mean, nobody really been there, and that, I mean, that was happened in like 1919 or 1920, early 1900 period. So what happened was that during the hyperinflation period, right? I mean, before the Hitler come to power, that was the reason why Hitler come to power. Anyway, that's for history. So what happened was that during the hyperinflation period, okay, the German stock index actually they rose, they go up, they go up, Economy is really like going down the rubbish bin, but the stock market go up. You see, you got what I mean? So we cannot like shut the case out because of the stock market. The economic condition are bad now. Doesn't mean that the stock market is going to go down. Okay, so what I'm trying to the point I'm trying to make here is that currently the so-called actually the whole global issue not only US. Okay, the debt to GDP ratio is it was the second highest compare the last time that is that higher. It was in the World War II. Okay, so what might happen is that to get out this kind of situation, most of the country, how they solve this issue is that they devalue their own currency. So you got what I mean? That's why we have to look back at the history to find out what really might happen, because there is most likely more or less something like that happened before. Because it's a human nature, people are likely to react roughly the same. That's why people say history repeats that. So I think if in this case is happening because of this $3 trillion in 3 months they print up, I expect at least there will be some kind of like not say hyper, but there will be some kind of inflation that inflate the market soon. Yep. So because of the inflation that inflating the market, doesn't mean that stock market is going to go down. You got what I mean? Because people will think that rather than putting into the like other asset class, they might want to put into the equity, which is stock market, right? So to answer your question, we might see the case of stock market go up higher eventually. May not be immediately like by tomorrow or what, may not be, but I think stock markets can go up higher. Like people have been talking Dow Jones 30K, right? 30K? Yeah. So yeah, I think that could be the case. Yeah.
Correct. I think very good point. Actually, I do agree with Kauto here, right? Or at least from my peers around me, with interest rates so low, right? We see that, or at least those in Singapore, right? We are seeing that bank interest rates are cutting, right? Whatever high yield accounts that you have are cutting, right? I quote some for Singaporeans you might know, right? DBS, OCBC, etc. So a lot of friends, even for bonds, right? The SSB, the Singapore savings bonds are at I think 0.25% or 0.5%, and friends are asking, hey, maybe I should just put into stock, because everyone is telling me that, hey, put in the stock, 5 years later you will reap the you'll reap the benefits and etc. And the dividends are still relatively high, right? As in, of course, we don't talk about penny stocks, right? We just talk about any normal blue chips. So it can be from Singapore, it can be from the US stocks market, etc. Depending on where our audience is from, right? You can put in anything. The dividends definitely will be higher than your account, right? But of course, there's risk associated with it. But most of the time, you can, if you have a waiting time of 5 to 10 years, you are relatively good to go put it into any blue chip stocks. And I think that's a very good point, that the US stocks futures definitely might, or maybe not definitely, still have more room to run, at least for now. Right? And of course, so that the NASDAQ, the tech index, have broke the new high furthermore, right? And of course, we are seeing some, I mean, to quote one of the incidents that I'm seeing last night, and I believe a lot of stock traders are talking about it, this will be on Tesla. Right? We saw that Tesla broke to, I think, 1,008.
I have a small short last night actually intraday before I sleep. This just to do a bit of sort of like trap the new trader per se. Of course, market doesn't go one straight line, right? Because yesterday I noticed that I was, I think about Singapore time, 12 o'clock, midnight. Yeah, it was trying to break back down from 1750 region. Yeah, then I started to see there's some momentum. I just, make a small profit out of it. Yeah, please go ahead. Sorry, I'm disturbing
No,
you.
no. So of course, for Tesla, I think that is a very good example of, if you don't know what you're doing and you see tech companies like Tesla is moving so high and you're thinking, hey, people are shouting 2,000, 3,000 for Tesla. And if you don't have a plan, right, you don't know what you're doing, you might feel the motivation to go in and just put in a bit. You might think that, hey, I put in 1,008, no worries, I can wait for 10 years. But the thing is, you don't know the fundamentals behind it, right? It's the same as trading any instruments. You don't know the fundamentals behind it. You wait for 10 years, it might never go back to 1,008, right? So
that's right.
I think this is a very good point. And then I saw one of your posts, it was on Tesla versus the Toyota, right? Tesla only selling 300,000 cars, while Toyota, a few millions of billions. So, and the valuation is out of the world, right? So I think that's a very so of course this brings us back to all the instruments that we are trading, not just stocks, right? Even for forex and anything else, you must really know the fundamentals. And I believe one of the quote from you say that fundamental is the backbone, right? If you are trading forex. So so I heard that from you before during one of our seminars, and I do agree, right? You can have technical analysis, you can trade, but if you really don't know fundamental, you don't care about interest rates, right?
Can I just follow based on the technical analysis, right? You have to have a fundamental, then you based on that, then you build your case around it. Yeah.
Correct. And I really do agree, right? For most traders, they say that, I have my trading strategy, good enough. Don't need to care about what's happening in the world, right? But ultimately, how the currency moves is still fundamental, right? It can be some manipulation, but fundamental is still the key. Right. Okay, and of course, I think the next question could be the last one or two questions to ask is that do you believe? We are seeing the situation in US, on the Robinhood traders, right? Or are you seeing something like a pattern during the .com burst or during the 2008 situation whereby people are coming in, there's a lot of interest in stocks, even your uncle, auntie who never ever touch telling you, hey, So of course the question will be, are you seeing this kind of pattern, and do you believe that a bubble might be bursting in the near future, or maybe this year or whatnot? Yeah.
Okay. Actually, you have a good question. Let me find a way to answer that. There is okay. All right. Okay, because when you were asking me that, I was trying to rephrase how should I answer. There are two major items that you should be looking at. The two major items that you should be looking at in order to see whether the market will go up a lot higher or it gonna repeat just like what happened on the the .com burst, right, that we have in 2000, which is very painful. Yeah, you have. I'm sure but those people who does it, right, please make sure it like a Nasdaq, they take like 10 years just to recover. You know what I mean? So it's like I don't want anybody to be the one that's stuck at the high side. Okay, there are two major items that I can think of. Okay, the first one is that I want you to take a look at the Fed balance sheet. Okay, maybe later in your page, right? I will post a link that where you can see. Okay. If you notice, right, now the stock market is having a little bit jittery now, right? For the past 2 weeks, especially on Dow Jones, right? There's a reason behind it. Nothing to do with technical. Technical is something like because of something technical analysis will show you. You know what I mean? You have to go to the source. Okay. So what happened is that the first one is of course the Fed fund, the Fed balance sheet that you need to look at. If you look at it closely, since from I think from June 10, right, the Fed balance sheet, right, it have been dropping back since June 10, 11 period. So if you go and look at your technical analysis chart, look at your Dow Jones, right, the market have a very big sell down on 10 or 11. You know what I mean? So they are like somehow directly proportionate. So number one, back to the number one point, the market will fall or even fall further or eventually will fall lower if the Fed balance sheet keep on dropping. That means they are pulling money back they are sucking money back from the market. All right. So this is the one thing that I want you to take note of. Okay. Second one, of course, is COVID-19, right? So if the COVID-19 getting worse. It's getting really out of hand. It's already bad enough, but it's getting worse per se. And of course, it can have a very big sell down in the stock market. And I believe even if the stock market have to drop, I believe other market will drop faster, even compared to US. Of course, US will drop as well for sure. I'm not saying they're not dropping. If there's a case to drop, and I think that the other guys will be dropped faster, in my opinion. Yes. So two item. Look at the Fed balance sheet a little bit for sure. The second one is situation of the COVID.
Okay, I think that very, very good point on that as well. So basically, balance sheet and COVID situation. So COVID situation, I mean, at least from what we are seeing, US is definitely not doing well, right? We saw that Texas, Florida closing back again, right? And of course, Fed balance sheet, definitely, for your audience here, definitely you have to read more on that. So for me, quite new to me as well, definitely I would have to read more on that as well. And of course, last question, before we end off will be, we'll talk about Hong Kong, right? Hong Kong Housing Index. So of course, recently there's a lot of things happening in Hong Kong. So US actually wanted to remove the US peg to Hong Kong dollar. So of course, there's definitely some issues on that. And of course, I think the main question will be Hang Seng Index. If you happen to be looking at it and doing some analysis, you feel that the situation in Hong Kong will worsen, whereby it will cause Hong Kong the Hang Seng Index to fall lower in the near future.
Okay. There is I would say we need to look a little bit on the time frame. Okay. Apparently, Hong Kong. What is happening right now is that I think looks like all the bad news supposedly are already priced in already. So it's like and if you notice, China is pretty. I would say China is, because when COVID-19 happened in China, they are the first, right? When the rest of the world is not really have the issue yet. But eventually, of course, the rest of the world follow. And now, when we are talking about the lockdown again in US, right? China is actually opening up. So reopening up. Sorry. So what is happening is that the China data can be quite good actually. If you look at I think it released on yesterday or today or yesterday, right? The China data is actually quite good. So the point that I'm trying to do here is that Hong Kong, I expect for the near term, I don't think they will be quite bearish in my opinion, because of the all the bad news are already priced in, and China data is sort of like making a comeback. Okay, there is a few reasons. If of course the first thing is that if people start to take on the street again, of course is we have a problem. And second thing is if the COVID-19 issue worsen again, it will be a problem. I think what you can do here is that, for example, if you expect the global market to go up higher, instead of buying Hong Kong look more on the US market. You got what I mean? Even the Hong Kong go up, I think US market will go even higher. Okay. On the reverse, if you are thinking that things are going to get back from bad to worse, right? Instead of shorting US market, I think you should look at Hong Kong market. When they drop, I think Hong Kong will drop a lot farther and faster, in my opinion. I mean, you have to compare the situation a little bit. If go higher, don't choose Hong Kong, choose US market and stuff like that. If go lower, choose Hong Kong. Yeah,
I see. Okay, I think that's a very, very good point from you as well, from the Hang Seng Index, right? Basically, if you want to short, or if the situation worsens, right, I think the Hang Seng Index may be the first to go, right? And of course, if you are looking long US stock futures,
I mean, no hard feeling against Hong Kong people, but I mean that's what that's right now. Yeah.
Right, and of course that would be the conclusion for our interview. That would be the last question. Right, so of course, to sum it up, right, we actually had a very, very good interview with Mr. Fullerton here, right? So for those you want to know about US stocks futures, Hang Seng Index, gold, commodities, and if you want to know more, right, from Fullerton here at Sonic R Systems, right? So actually here, I actually have the socials, Telegram group, right, for Sonic R Systems, right? So of course, if you guys want, go to Telegram, follow Fullerton and his team on Sonic Traders. If not, you can follow him on his Facebook. I believe on Facebook page, you guys have a page as well, right? Sonic R Systems.
Yeah, we call it Sonic R Mastery Group. Sonic R Mastery Group. R for Russia. Yeah.
Okay, and so also of course for the audiences, if you are more, if you like to use Facebook more, right, you can also follow the Sonic R's Mastery Group on Facebook page. And of course, for us, Fullerton Markets, right? We are a trading platform, brokerage firm, right? If you want to trade Forex, US stocks, futures, Hang Seng Index, Dow Jones and whatnot, feel free to come to our platform, open an account, and you guys can start trading there. And of course, for more information on trading strategies or some direction of currency pairs and whatnot, feel free to follow Mr. Carlton there on Sonic R System.
That's right.
Right. So, of course, thank you so much, Carlton, for this interview. I believe
Thank you for the chance, bro. Thank you for the chance. Thank you for having me.
It's really my pleasure because I really enjoyed our interview today. I definitely posed a lot of difficult questions, and I can see that you definitely have a very complete answer, and I really enjoyed the interview. All right. Thank you so much, everyone. And hereby we'll conclude the interview, and we will see you guys in the interview.
Yeah.
Right.
Thank you.
Thank you.
Thank you very much.
Yep.